Today's number, 53%. That is the probability Polymarket is assigning, as I record this, to neither Jordan Bardella nor Edouard Philippe winning the 2027 French presidential election. Is that a mispricing we can take advantage of? Let's find out. I'm Professor Benjamin Smart. This is Polymarket Prof. Welcome to our experiment in prediction market investing. Polymarket controversially markets its wages as event contracts and its activities as trading. That may be clever branding. To many people, it still looks like degenerate gambling, and very often it is. That is the starting assumption of this channel. Left to itself, prediction market trading is usually closer to degenerate gambling than to disciplined investing. But here is the experiment. Can ordinary participants do better if they treat contracts the way a speculative investor would treat risky assets in a portfolio? Diversifying, looking for mispricing, taking profit when markets move, and cutting losses if the thesis breaks down. This is what this channel is here to test, openly and in public. This is not investment advice. Prediction markets are risky. You can lose all your capital. If you choose to trade these markets, do your own research and try very hard not to behave like a degenerate gambler. Gamblers are losers. The views expressed on this show are the speaker's own, do not reflect the positions of their employers. Today we're looking at two positions. First, the 2027 presidential election. Second, Ron DeSantis for the 2028 Republican nomination. The first is a hold to resolution style trade. That is, you buy the contracts and then hold them until they resolve. The second is different. It's a repricing trade. I do not need and do not expect Ron DeSantis to win the Republican nomination, but I do need the markets to move. So let's start with France. On Polymarket, Bardella is currently 24 cents and Philippe is roughly 23 cents. Added together, that gives you about 47 cents of exposure to either of those two men becoming president. Put the other way around, the market is saying there is about a 53% chance that neither of them wins. My view is that this is too high. I think the market is underpricing the chance that one of these two names comes through, and that this mispricing offers us an opportunity. Here is the basic idea. France has a two-round presidential system. So in the first round, assuming nobody gets like a clear majority, which is very unlikely to happen, then the first two candidates go through to a second round, and the winner of that second round becomes president. Bardella is very likely to make the runoff, according to the polls. The real uncertainty is which centrist or centre-right candidate joins him. Right now, Philippe looks like the strongest candidate in that lane, and indeed, the polling suggests he's the only one that would have a chance against Bardella in the runoff. If the centre fragments, Bardella benefits. Either way, owning both names gives us exposure to what I think are the two cleanest paths through the field. So when the market prices neither Bardella nor Philippe above 50%, my reaction is that looks too pessimistic about the probability mass sitting on these two names. So this is the important math. If Bardella trades around 0.24 and Philippe around 0.23, then buying one share of each costs 0.47 or 47 cents in total. If either one eventually wins, one contract settles at 1 and the other at 0. So the paired position returns $1.47 and implies a gross profit of 53 cents before fees. That's more than doubling your money, right? The break-even condition is therefore simple. The true probability that either Bardella or Philippe wins must be higher than 47%. My thesis is not that this pair is certain to win, it is that the market is understating the chance that one of them does, and this is where we have an edge. It will therefore become part of our portfolio. The second trade is Ron DeSantis for Republican nominee. Ron DeSantis is trading around 2.7 cents for the 2028 Republican nomination. On the face of it, that looks tiny. It's pricing in a 2.7% chance that he'll get the nomination. And I actually don't think that there's much of a chance that he will get the nomination. J.D. Vance is the current favorite by some distance, and Marco Rubio is the clear number 2 in both the market and the polling. But I'm not proposing DeSantis as a hold to resolution bet. This is a trading position, so the idea is to close the position before it resolves. The thesis is that 2.7 cents may be too low for someone with DeSantis' national profile, donor network, prior second place finish in 2024, and plausible path to being one of the last few names still standing when the field reshuffles through the primary process. So this is not a bet that DeSantis will become the nominee. It's a bet that 2.7 cents undervalues his chance of remaining relevant deep enough into the cycle for the market to reprice him upwards. If he moves from roughly 3% to 6%, then we can double our money, or 8%, even better. So this could happen on better polling, debate bounce, endorsements, advance wobble, and that is a very large percentage gain on a position, even if it never gets close to winning. So, in other words, this is a volatility and repricing trade, not a prophecy. So this is where the investment frame matters. Gamblers, they want to be right. Investors want positive expected value and survivability. That means diversification. It means not oversizing a single position. It means taking profit when the contract runs in your favor. It means admitting when the thesis is wrong, cutting the loss. And it means not confusing a temporary headline spike with genuine information. Prediction markets tempt people into all or nothing thinking. The purpose of this channel is to get away from that and treat Polymarket more like investing than gambling. So, to be clear, this show begins with the assumption that unstructured prediction market trading is gambling. But what I want to know, as a philosopher of science, is whether these markets can be made to behave more like investments if you approach them with discipline, diversification, arbitrage logic, mispricing, profit-taking, and loss-cutting. We are going to test that in public. Every trade, every rationale, every mistake, complete openness. If you want to follow this experiment, please like and subscribe. And if you have ideas for trades, put them in the comments. But don't just tell me the contract, tell me the reasoning behind it, and we'll go and do a deeper dive. See you on the next one.